Hello and welcome, and it is the final day of March, the 31st, Crypto Day, and CryptoCompare.com. I like this webpage, and what I got on here is Ethereum Classic. And when you go to the chart, I don't know where the advanced chart is, but I've already clicked on it. However, this is where I can get the XLSX file, and I have already gotten the file. I can see that this market went down a bit, up nicely, back down, and has relatively been going sideways. And the spreadsheet now. So I've got the data. This is the date. So I'm starting from the year 2017. The first column is the closing price. The second column is the high, and the third column is the low. I only need those three numbers, but I do need all of them. And then I got the data all the way down to current, which of course would be 0331. There we have it. So the columns that I made, the 143.6778, that just represents how many I could buy, or how many 0.2 Bitcoin was worth when this thing closed on the first day at 1392. So assuming that's when you started, it was January 1st, it was like 5 p.m. Eastern time, or 7 p.m. or whenever the market closed at. That's how many you would get for 0.2. So this column tells me how many I own. So I would start with 143. What the value of them is in Bitcoin, 0.2, which is where I want this always to be. When the price goes nicely above it, or above it enough, I'm going to sell it back down to 0.2. And when it goes down, I'm going to buy it back up to that number. Sell 20, buy 20. What that means is if the market goes up 20%, so therefore, if my value is 0.24 or greater than such, what number does that take me to? And in this case, it would take me to 16,704. If it's down 20% or worth 0.16 under that number, then what does that take me to? So and the answer is 11,136. So now we got those numbers. We got some more data, or some more calculations. Sell 20 fell. What this tells me is, did the sell order get executed? If it did, then I want you to calculate how many I have to buy. And I already know the answer based on the fact that it's always going to be selling it from 0.24 back down to 0.2, because it's always going to be worth 0.24 here at that sell order. And then this calculation here is the price target, or the sell order. Multiply how many you sold. Multiply 0.9975, because there's a rake or fees to make a trade. The buy is in a situation where if it's down, same thing, and it's going to pay a little bit of a fee. So on here you start off paying 0.200, and that 5 would represent what the fee would be. As we can see, it took a while. We're looking for the first trade. It took over 70 days before some buy orders got filled, but that's only if the markets have the decent sized moves within the day. So then the next little column is adjust inventory, which means if I bought or sold, how many did I have plus the amount that I bought, subtract how many that I sold, what the net value is, how many ETCs I would need to be worth 0.2, or how many 0.2 is worth. And now I have up to fill. So if it's up at least 2% or more, or anything better than 2%, then I want you to sell. And in this day, it was up like 1.7%. So that wasn't good enough at 0.2017. But the next day it was 0.2047, which meant that it was up a little over 2%. So therefore, it sold 3.32. And that's a very simple mathematical calculation, as I would take how many I own and subtract how many I'm required to have based on this calculation. So the upfills get done this way. The downfills get done in here. And then how many do we have for tokens or ETCs when I'm done? And then just cross over through per day. BTC. This is for the situation if you were to start off with, say, 0.3 Bitcoin. I've already put in 0.2 to start. Now, I knew how much it ends up costing me, so I use this number for purposes of analysis later on. But if you buy something and it keeps going down a lot, you can start with 0.2, and next thing you know, you're putting over a Bitcoin in it because it goes down substantially. So there's something to keep in mind within such. And so yes, this is how many Bitcoins it's worth. So I take the number, I add any sell orders that come in, and I subtract the amount taken away in buy orders. That's how this is calculated, and it's very important to use such, because what I have here are two different columns, which I'm going to be using or showing charts with very, very soon. I got HODL 215.5 in portfolio. Because if I'm starting off with 0.3, buying 0.2 in the alternate coin and keeping back 0.1, I want to see how just buying and doing nothing for the exact same starting amount is going to work. It takes 215.5 at the exact same entry price to assemble 0.3 to start, which is why I chose that number. So this column is very simple. How much is 250.5 worth, which is 215.5 multiply price. Portfolio is how much my Bitcoin is worth, adding what the value of my portfolio is worth, which is pretty much 0.2, plus, of course, the Bitcoin number. So now let's take a look at these charts, and I'm going to show this data from the start of 2017 to just a few hours ago. And here's the first chart. So this is the entire run. The blue line represents just hodling going through, which obviously was destroying the orange line, or that of buying and selling, because in this case, my goal is never to get the outstanding gains that anything may give me, but to take whatever gains become available and always own 0.2 Bitcoin worth, regardless of its price. And when you look at this a little further, we can see that this price right now is hovering on this line, which was an area of resistance in here. So the portfolio is a little bit better now than it was back here, just by buying and selling, just marginally better. This is when the price was like, well, the hodler would be going from 0.7 down to 0.5. So this is how much, so it's actually lost within that point. Also note that when this thing was first breaking past this line, this is when the market was breaking out in here. So it's went from like a portfolio value of like 0.9, and it's lost half its value. And in this case, it has maintained its value. So I'm going to take a look at this again with I'm just deleting some of the earlier dates. So this is the last 170 or so days, which again shows how when you're able to make as many buy low, sell highs that you possibly can, that you're going to overperform doing such. It's just mathematically designed that way. And it's just a nicer declining move in here than, of course, how we've seen ETC do such. Now, if you ever want to compare two markets together, and thus adjusting for each one's volatility accordingly, it's relatively easy to do. And within such, I've done it here. Now what I've done is I have, within these values, figured out what the maximum price for each one is as well as the minimum one. So the maximum the 0.3 holder got up to was being worth better than 1 3/4 Bitcoin, and was down to as low as 0.219. The trader, the lowest their balance ever got to was 0.2439, with this being the highest. Therefore, the formula for this is you take log, and you take the log of current price divided by the min, and you divide that by the highest price, or the log, excuse me. You take the log current price divided by min, and then you divide that by log again, highest price divided by minimum price. And that gives you how much on a logarithmic level it has retraced between the lowest and highest variables. So within such, I was able to do some more calculations in here. So this is using the log scales in here, which I did for both of them. And I was able to then create a chart. And this is what it would look like. And this is from the start. So it's designed that this has to top at 1 and bottom at 0. And thus, from the worst and the best period that it's at, buying and selling has you've maintained 80% of what you've held, or you've only given back a 20% retracement from your overall highs. Whereas in here, you've given back over 61%, logarithmically speaking. And we can also see that they all move up and down accordingly within each other. But when we can see here, this low to this low, it was barely a lower low. But here, it's a higher low. And then this breaks matching resistance 3 times, where this resistance was well lower on around 350 area. Period 350. This resistance in the blue was much lower than the two before, where the orange was a matching resistance level. So it broke it and made new highs not seen in a while. And within this, it's just it wasn't doing quite as well. So in this case, you're holding back to where you came from, and your portfolio is a little bit better now than it was at its peak during any of these times, or at the same value pretty much. And of course, we can see within these highs, well, ETC in itself is down in value. So this type of trading strategy, just doing this over the long-term time frame, is designed so that when you're trading, for you to actually be down in a code, especially something that has had a lot of good up and down choppy action, it has to be down a significant portion for you to actually be losing on the long-term time frame after you've assembled enough of a sample size of trades. Because when this thing breaks above this resistance in here, it'll be, or gets towards it, it'll be looking to make new all-time highs for your portfolio. And when it gets up here, we know for sure that the blue line is only going to get up maybe 60 per retracement, a lower high retracement to this point, because of how it is designed within the buying and selling within this strategy. So thank you for tuning in. If you have any questions, feel free to send them along, and have yourself a great day. Bye-bye.